개발도상국에서 글로벌 스타트업 만들기 주제로 이야기 이어가 보겠습니다. 모더레이터로는 글로벌 클래스의 저자 클라우스 위헤이, 패널에는 큐라셀의 창업자 헨리 마스컷, 피치 파블의 대표 마팔로가 함께합니다. 통역이 필요하신 분들은요, 뒤편에 리시버 준비되어 있으니까요, 사용해 주시면 되겠습니다. 여러분, 큰 박수로 환영해 주시기 바랍니다. Please welcome them with a warm round of applause.
All right. How are you guys doing? Awesome. We're at the tail end at the conference, so thank you so much for staying here with us and listening a little bit to the insights that we're going to be sharing with you guys today. So my name is Klaus Wehage. I am from Denmark originally, but I live in Silicon Valley. And I'm the author of the Wall Street Journal best-selling book, Global Class, that got published in Korea in August. So I'm excited to being back here today. And so today we're going to be talking a little bit about emerging markets. And so we've seen a big trend even in the research that we've done of a lot of companies from even mature markets and developed markets wanting to actually penetrate developing markets because of the massive opportunity that exists. You know, a few different examples, for example, is in Vietnam, the average age of the population there is 25, and I think there are around like 105 million population. And you also see the African continent as well, about how many? Is it 2 billion people?
1.2 billion.
1.2 billion people, and very young age as well. So a lot of opportunities there to tap into. And so we have two great individuals here today to speak about that, to kind of share their experiences. So we have Henry here, who is an entrepreneur, who is very much focused on commercializing his technology in emerging markets. Then we have Mafal over here, who's an investor from Senegal. And so to start off, I would just like for you guys to share a little bit about yourselves, to give a little bit of context to the audience. So maybe we start with you, Henry, and then we move over to Mafal afterwards.
All right. Thank you so much, Klaus. Hi, everyone. My name is Henry Mascot. I'm a co-founder and CEO of Curacel. I'm Nigerian. Grew up in Nigeria. I spent my time in London these days, but I spent a long time in Nigeria. I co-founded Curacel close to 5 years ago. Curacel is a startup that, has made its mission to build out the infrastructure for insurance, starting out of emerging markets, but also go global. The specific problem that we're very excited about solving is right now in most emerging markets, whether that's Africa, whether that is Middle East, whether that's Latin America, insurance penetration is at 2%. Insurance penetration is typically looked at as a GDP, insurance per GDP. And so the world average is around 6%, and most global markets are much more mature. And we think this is very important because, especially in emerging markets where people are not very rich yet, it's very sad that when you get sick, you have to pay out of pocket for all your healthcare expenditure, or if something happens to your house or your business or your car, that you have to spend all your savings to take care of that. So we think there is a massive opportunity to be able to cover that protection gap, which is get more people insured, get more people having health insurance, and so on and so forth. So that's kind of like the mission of the business. My background is in product development, so software, building technology products. So myself and my co-founder, we looked at the problem and we said, how can we best contribute to this problem? And for us, it was to build out the software infrastructure to power this. We started out of Nigeria. Now we're in 10 countries. We've been, again, lucky to have been backed by investors like Y Combinator in San Francisco, by Google, by Tencent. So that's kind of like where we are, and we keep pushing the boundaries. We're right now trying to scale into places in the Middle East and eventually across the world. So that's the start. We've raised maybe close to $4 million in capital to date.
Awesome. Mafal?
So hey, how are you? My name is Mafal. I'm the CEO and co-founder of Pitchpala, which is an accelerator based in Dakar, Senegal, in Francophone Africa. I'm also the founder of Angel Network La Tanière, which focuses on very early stage startup to fuel investors from seed to Series A. As an entrepreneur, I've start 3 startups, one in edtech, edutech, one in advertising, and two startup. And yeah, I think that's it.
Great, awesome. Thanks for sharing the context a little bit here. Now, when it comes to scaling in developing economies and emerging markets, it can sometimes be hard to actually penetrate because these very mature traditional industries sometimes are very tied into even maybe government and not fully privatized. To give you a little bit of an example, I was a part of a local market expansion team in Vietnam and for Carlsberg, one of the biggest beer brewing companies in the world. And the way that beer brewing companies are expanding into emerging markets and other markets in general is acquiring local breweries so they can acquire them and actually pull their products through their distribution channels. Now in Vietnam, for example, breweries is partly owned by the government. So how do you acquire a brewery that's government owned is extremely difficult. So penetrating emerging markets can sometimes be a little bit tricky. And so maybe what you can share a little bit about and how you approach it, trying to actually target the insurance industry in these emerging markets, and how do you sort of turn them into actually clients and partners?
Yeah, thank you very much. So for us, obviously, I think we have a very unique, we've had a very unique experience. Obviously, very different from a traditional business because we're a software business. And so software businesses is less local barrier to entry because essentially all your product is in the cloud, right? So as far as you have a good go-to-market and there's very little regulation, blockade as well. So for us, for our business, slightly easier for us than a few of my friends who are pure fintech plays and they require a local license and so on and so forth. For our own very unique experience from day one for our business, we always wanted to be a global company, and I think that helps. And so from the very first year of our business, although we started out of Nigeria, which is the biggest African market, 200 million people, biggest GDP, close to 500 billion. And so, most people were like, hey, why are you trying to go somewhere else? Nigeria is big enough. But for us, myself and my co-founder, we really wanted to do it. And so from day one, we were always looking at what are the opportunities that would allow us to go into newer markets very early. And so accelerators were very helpful. So we had a corporate accelerator out of Cape Town in the very first year of our business that was sponsored by, one of their LPs was a big insurance company, Old Mutual. And they had presence in multiple markets. So that was very helpful for us to be able to scale. Another strategy that we had was selling to multinationals, like an AXA. Because these guys are in multiple markets, that means when you go into, let's say, their Kenyan business or, the South African, whatever, right? There are a couple of insurance companies like that. And you deliver value in that market, then they can easily scale you into other markets. So that's, for us, I would say that those are the strategies. So going through programs that are in markets that enable you scale easier. We're doing that right now as well with our, expansion into the Middle East. So we're also working with Plug and Play, for instance. We're in one of their programs in Egypt, and they're helping us as well. So for an early stage business like ours, where we haven't raised, hundreds of millions of dollars to build out local teams, we kind of like nimble it and, scrappy and figure out strategies to do it.
Awesome. Mafal?
Okay, I'll take the point of view of an accelerator and incubator. So I asked one of top companies in logistics in Senegal, and he told me that one of the main challenges was to be into the it was difficult to integrate influential decision-making circles. So I guess that to come to this problem, we can leverage two pillars. First, from the start, like you, think global, and make sure that in your team you have people that can help you to penetrate the markets. And also I have this discussion with SBC, Startup Bootcamp, and we was thinking about how we can act as soft lenders for companies in Nigeria for them to penetrate the Francophone market and vice versa. So I think that the approach that to be close to incubator, accelerator that are close to the market is the valid approach for me.
I think that's a good point. Just to reference something in the book, we talk about team building as an example, and we put emphasis on the importance of having an overlap between what we call local knowledge and company knowledge when you build teams abroad. So on the local knowledge side is obviously the local insights, understanding the culture, local networks, and trust. Being able to build a team around that as well, so you can easily penetrate into new markets, and you leverage obviously accelerators who have that already. But then obviously also on the company knowledge side, you understand the company core values and the culture, and have the network within the company to then move the needle on the stuff that you need to do locally. For example, when you need to change a product within that market, you need to be able to interact with the CEO and the founder and the team, say, hey, we need this support. We need to change the business in order to truly penetrate the market. And so that's really, really important. Now, moving over to another topic here is, as a question I was given by the COMEUP team, is that for companies in emerging markets, it's oftentimes hard to get that global recognition, to get the global exposure. Can you talk to me a little bit about why does these challenges exist? Give us a little bit that local context, why you see local founders not being able to do that.
Yeah. So if you see my experience is obviously being African, this is different, but I think it's, because you're coming from emerging markets, right? These markets are often not that big from a global perspective, right? So for instance, the US economy is worth 26 or so trillion, and the Nigeria is what, like 500 billion, right? So you can see the sheer difference in size. So it's pretty obvious that for a business that operates in that market, when compared to much bigger competition, it's very, very small. And again, this speaks to one of the questions earlier when, that you mentioned, which is why some of these global players struggle to come into these markets. It's just because they're just small, right? So I think for us, we've kind of like, the way we've solved for this is by being part of global accelerators like Y Combinator. But I say if we weren't part of things like that, then it would be pretty obscure, right? Again, I think one of the challenges also is for some of these markets might be a bit of branding and PR. A lot of the emerging markets, for instance, a country like Nigeria might not have the best PR outside, right? There's this joke of the African prince, with fraud and all that. And so I think it's, oftentimes the bad news spreads more than the good news. So the public perception, which is shaped by media, often isn't great. And so I think these are some of the challenges. So because of the market size and also because of some of the way the public, the news, PR has positioned some of these markets, when you're trying to go global, then there's a little bit of like trust, these guys are from this place, blah, 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 and so on and so forth. So I think, again, we're yet to see this challenge uniquely because we don't operate in places like the US or Europe yet. A lot of where we operate are still a bit emerging markets, Saudi and Dubai, which is some of the places we're going into now. So we haven't started to experience this, but I suspect that what would help us would be being affiliated with very global brands like our investors like Google or Tencent or Y Combinator.
Awesome, fantastic. Mafal?
Yes, I would add on what he said with the language barrier. As far as I'm concerned, I think that, for example, Nigerian startups are more exposed to international recognition than, for example, a Senegalese startup or Ivory Coast startup because of the language barrier. We see that also in the statistic because when you see every batch of Y Combinator, for example, you have a lot of startups from Nigeria, from Ghana, and a bit less from Côte d'Ivoire or Senegal, first. Second, I think it's also a question of perspective because in my perspective with as a francophone African stakeholders, we know who raised more than 1 million, 2 million, $5 million. So to me, these guys are exposed internationally, but at the level of the continent. And I think we should recognize this, we should acknowledge and recognize this kind of exposure, saying that it's not because US don't know our startup, is that they are not our stars in Africa. And I think it's very important to have a point on that. Yeah.
I think that's great. And sometimes it's even tied to culture as well. In some cultures, you're a little bit more humble. For example, from Denmark, where I'm from, or even in Japan, you don't brag about things. So really getting that global recognition, pushing out PR, saying we're the best in the world is a little bit uncomfortable to people. Now, moving a little bit over to the other side in terms of international companies coming into emerging markets. Why do you think a lot of these companies are failing in penetrating emerging markets? Can you share a little bit of context there? Yeah, go ahead.
So I think I probably jumped the gun a little bit, a bit earlier. So I think I probably already started on this in my previous answer. It's just really the size of the market, right? I think a lot of the businesses from a global stage who come into emerging markets, it's because, again, they see that, you know, for instance, Africa is 1.2, 1.3 billion people. And so if you're building a long-term business, then it's pretty obvious to you that you need to have presence in a place that has 20, 30. I think in 2050 it's going to be half of the world, or 30, 40% of the world, something like that. So if you're building a long-term business, then it's pretty obvious that you need to figure out how to be part of that place. So I think, you know, a lot of them are driven by, especially if they're consumer businesses or stuff like that, they're driven by that need to be in a place where the future is going to grow a lot. But I think oftentimes the challenge is being able to make the economics work in the beginning, especially if a lot of the products are being developed in the West. So it's making the unit economics work. And so I think when you see a lot of businesses who come in and then they eventually don't work, it's because they're not a very stable business yet on a global scale. So I know there's a lot of joke around like how a lot of us in Africa, where our Netflix and our YouTube and all that are being subsidized by the US. I think the US is like, you know, 70, 80% of the rest of the world, right? So I say that a lot of the challenge is because the economics don't work, because those markets are very early from an economic perspective. But a lot of the businesses who do it for the numbers, do it because it's kind of like where a lot of people are going to be in the next few years. So if you're a business and you haven't figured out your economics in other markets, then it's probably going to be hard to scale into emerging markets because the margins are much smaller, especially if you're a consumer business.
That makes sense, yeah. Mafal?
I have this discussion with a friend of mine who ran a fintech from Morocco to Mali. I think 10 countries around Francophone Africa. And what he told me is that the main point is cultural. Even if you can have the same needs, the way you address it can make the whole difference. Because some companies try to do copy-paste in terms of processes, in terms of how you address your sales process. And he said that is the best way to fail. About the economics, I have another company who is in the logistic field, saying that, you know, in some countries you don't have a properly addressing system. And it means that even if in terms of how you price for global clients, it changes the whole thing. It can make the negotiation more complex. Because if you have to give a price to your client, let's say Orange, which is a global company in the region, you can sometimes give a different pricing in Senegal and in Mali just because they don't have the same system, addressing system. So I think the whole point is about redo the customer discovery process to make sure that all your hypotheses that found your product market fit is stable in the new environment.
If I were to add something,
totally.
So it would be infrastructure, right? So he captured that it's, you know, if you're scaling from, you know, more mature markets, there's infrastructure, right? So when Amazon started, there's the US mailing system exists. You don't have to build logistics. If you start an Amazon like Jumia that's listed on stock exchange, Nigeria, African business, you have to build your logistics. There's no infrastructure. So I think, yeah, that's one of the biggest challenges is you start out from mature markets that there's a lot of infrastructure, and then you come to emerging markets where it doesn't exist.
I think part of it is also the mindset of companies when they expand into emerging markets. They kind of think it's plug and play almost. And there is a need for adaptation, of course. And so in the book, we talk about localization, and we build a very specific tool called a business model localization canvas, where you say you need to take your validated model, and you have to challenge that, ask key questions. Will our value proposition resonate with local customers? Do we need to change our sales motion? Do we need to add new products or features to the solution in order to appeal to local customers, etc.? And you need to run these questions through two filters, as we call it, government and regulation and culture, to then develop your hypotheses for those new markets. And oftentimes, what I've seen is very mature companies don't take the time to do that discovery. They rush into things to hire a VP of sales and say, we're going to be successful, we're going to sell the product. But they need to spend about 2 to 3 months maybe to fully understand the market in order to then understand how to address it appropriately with the right business model and go-to-market model and so forth, right? So
can I add on that?
Sure.
Because I was asking to one of the companies I interviewed because this panel, he told me that it's not 2 or 3 months. It might be 2 or 3 years. So
Totally, I agree. But in terms of discovery, 2 or 3 months, but exactly, expansion takes on average between 2 to 3 years. So it's a long-term investment. And so oftentimes also companies, they say, okay, we're just launched here and now we move over to this next market, right, within 6 months. And then all of a sudden you're taking attention away from that market and you forget about allocating attention, resources, support to that local team that's struggling and trying to find product market fit. And also they expect profitability within 9 months. And that's insane. And maybe even the company in Silicon Valley is not profitable at all. And so it's kind of crazy, this mindset that exists when companies are expanding internationally. So just to kind of add that context to it as well. Now, I want to talk a little bit about you again, Henry. And I'm going to change the question a little bit because you kind of stole a little bit of the conversation around your specific question. But now that you're expanding into a lot of different countries, I'd love to maybe dig into a little bit more about how do you select those markets? What are some of the key criterias that helps you identify a market opportunity?
Yeah. So again, one of the questions you asked me backstage was, why we started expanding early, right? So whilst from a paper, right, it's 1.2 billion people. But when you look at we're a B2B company, and when you sort of like look at the addressable businesses, they're not that big, right? And so you have to make sure you have a bigger pipeline. So which is why we have a pipeline across a lot of all the markets. And so one of the things that we've seen, I've lost track of your question, please.
So what are some?
What do you look at? Yes. So the markets, when we're looking at all those markets that we're going into, we try to identify a few things like which markets are stable. I think this is one of the latest things I've learned, especially if you're expanding in emerging markets. And a very good example, by stability, I also mean like economically. So the bulk of our business, because we started out of Nigeria, was Nigeria. And so we're making maybe 60% of our revenues there. And then earlier this year, we had a currency devaluation by close to 70%. And so you see what that would do to your businesses. If that was all your business, the richest black man in the world is Dangote, and a lot of his business is in Africa, but in Nigeria. So his net worth will go from maybe 10 billion to 5 billion overnight, right? And so if you're a business and all your revenues are in that market, you would drop revenue by half. So stability is one of the things we started to look at. So we're going to go to Egypt next. We're expanding in Egypt right now, but because of also that, we're now pushing boundaries into like Saudi and Dubai, because Egypt is also going through the same macro where the currency has been devalued and economically. So that is one of the key things that we're starting to look out for. Obviously, one thing, language was one of the first things where we already have a customer who's there, stuff like that.
Awesome. I know time's up, but I just want to spend one more question, if it's okay, 1 minute here. But just, I want to just point on something that you said a little bit before here is diversification. Oftentimes expansion is seen as a risk, but you could also see it as a diversification of your business, to your point about macroeconomic issues that affects your business. Now, Mafal over here, you've been an entrepreneur, and you've developed a company in your market in Senegal, and so you have a lot of experiences in building companies in that marketplace, and now you're running an incubator. Can you talk a little bit about what you have learned from the past that you're then using right now to help local entrepreneurs be successful in scaling the businesses?
I would say two things. First, as first-time entrepreneurs, which is the majority of the youth in Africa, I think exposure to new environment is critical. I mean, the fact that you are able to put 5 Senegalese startups in this area, confront them to new concept, new environment, gonna help them to ignite the fact that, okay, they can go global, yes or no. And I have the example yesterday with one of the startups who discovered that his product might be a better fit in the Korean market than in Senegal at first. So I think exposure, the ability to our youth to travel around the world and be exposed to other culture is a first point. For the entrepreneurs that are more experienced, more mature like Henry, I'd say go with your clients. Yeah. If you have a global client, I think you should wisely follow him. You know, so that would be my advice to them.
I think that's awesome, and you pointed on something interesting as well. I'm going to refer to the book again, sorry about that. But we talk about the concept of an initial market. So sometimes the market that you're in may not be the market you should operate in, actually. Sometimes it's another country. So to give you an example, I don't know if you know Zipline. Yeah. Zipline is a medical drone delivery platform, and they're in Silicon Valley. They raised $200, $300 million or something like that. And they're like, hey, the US is not a great market for us because drone regulation is terrible and we can't fly them around. And also medical delivery and supply, it's kind of a problem that's solved in the US, right? So they're not really addressing any major issue in the US market. But the first initial market that they're scaling in is Rwanda in Africa. Right? So, and then getting exposed to new country, you kind of realize, oh, maybe there's a better fit in that market instead of actually scaling in your own home market. So I just wanted to point that out. So with that, I want to say thank you so much to Henry and Mafal for sharing their insights on their businesses and what they're doing to help entrepreneurs be successful. And I want to say thank you to you all for listening to us today. And if anybody is expanding, you can ask us any questions afterwards. We'd be happy to talk to you afterwards. And thank you to COMEUP as well. So thank you so much.
Thank you very much.